We are not using the rooms camera, right? Okay.
Okay. Good evening, everyone. This is Tune Tech Group third quarter analyst call. This is Peter. So as usual, we're going to go through the presentation followed by Q&A. Today's flow is we start with financial, then business update. So with that, I'm going to bring out our CFO for his presentation.
Yeah, good evening, everyone. Yeah, so we have released our third quarter results, and I'm pleased to share with you that third quarter 2024, we had a good turnaround of the profits or the business performance vis-a-vis second quarter 2024. So as you can see from the analyst deck, that in terms of insurance service results, the preceding quarter was a loss of 4.9 million, and we turned around to 6.1 million profit this quarter. Profit before tax, preceding quarter was 10.3 million loss. We are pleased to report with a 9.3 million profit before tax. And that's mainly driven by better cost control and a better claims experience. And if compared against the same quarter of last year, which is third quarter 2023, we had also made a significant improvement with the insurance service result improved by 17.3 million, improving from 5.2 to 6.1 million this quarter. And on the PBT, we have also improved by 3.2% from 9 million to 9.3. And on the PAT, it's a 50% improvement from 4.8 to 7.2. Do bear in mind that on the comparative number, third quarter 2023, we had this Tenang one-off effect, which came in about 7.1 million. Right? We will be able to show you the normalized chart in the subsequent page. So for the quarter, we also had a higher forex loss, which came in about 4 million. So if we were to exclude that one-off effect, we would be expecting a much stronger PBT for the period. Yeah. Peter, can you move to the next page? Yeah. On the next page, what we're trying to show you on the left-hand table is the normalized chart. So on the PBT, we are reported to you at 9.3 million. If we were to exclude the ringgit appreciation effect or the forex losses, the normalized PBT expected to be about 13.3. Compared to the same quarter of last year, which we reported a PBT of 9 million, of which the majority came from the Tenang effect of 7.1 million. And the remaining came from our business as usual profit of about 1.9 million. Okay, moving on to the next slide. This will show you the year-to-date effect of the 9 months results. If you recall, in second quarter results, we actually shared with you a few major events. We had the Thailand RAOT, one of the big this loss recovery that we have impaired, including the deferred tax asset, which came in about 4.9 million. Then we had the intangible assets write-off from our life business, about 3 million. And we had 3 large losses reported at about 5.1 million loss. And part of it, the year-to-date ringgit appreciation effect of 3.5. So from a 5 million loss, if you were to take out all this one-off event, normalized 9 months profit should be looking at about 11.5. Comparing to the same period of last year, we reported a PBT of 25.8, but a large portion of it is actually coming from the Tenang effect of 20.9 million. Okay, moving on, next page is the combined ratio. So if we look at combined ratio, comparing the preceding quarter as well as the same quarter of last year, we have both recorded improvement. Against the preceding quarter, combined ratio has came down by 11.3% point to 93.9. As against the same quarter of last year, improvement came in by about 1.3% point. And both improvements stem mainly from the lower incurred claims and attributable expense ratio, as you can see on the second bar, right, from the left, where the Q on Q, we are lower by 9.5% point. And on year, you will notice that on a normalized effect, if we to exclude the Tenang, it actually came down by a marginal improvement of 0.1% point. There are some slightly higher acquisition cost ratio, but that's largely offset by the lower reinsurance payout, reinsurance premium payout. Okay, next slide's on the investment. That's as what we shared with you in the last quarter. We have started to make some rebalancing activity where we are reducing our money market funds and FD and started to move more into the fixed income fund, but with underlying mainly in the low risk asset fund in MGS, GII, and government guaranteed bonds. So as of today, 75% of the unit trust fund are already in such a low risk bond fund. And we will continue to do this rebalancing in quarter 4.
Okay, that's all on financials. So we'll move on to the business update.
Hi, this is Hao here. So as everyone is aware, I think I'll just quickly run through the biggest segments of our business, which are actually travels and motor segments. Just to give you a flavor on what are the key activities that actually happened over the last quarter. So on the Middle East side, I think we have actually successfully rolled out CIFA, cancellation for any reasons, which is quite a hot product, I think, recently, requested by a lot of different business partners of ours, including like online travel agencies and airlines, etc. So we have successfully launched that product, I think, with our partners, Air Arabia in the Middle East. And we actually have seen quite an encouraging growth, I think, month on month as well as Q on Q, of more than 100% growth after we incorporated that in the one of the value pack, I think, of the Air Arabia's package. Claims actually remains encouraging, much lower than actually what we initially anticipated for. I think possibly because of it's actually part of the product bundle that also helped to bring our loss ratio to a relatively healthy level. And other than that, I think in the Middle East also, we have actually started our initiative of being not just insurance product offering, actually also add in ancillary services, I think, and try to distribute it through our partners with the regions. I think one of the first one that we have launched here is Flight Watcher. It was actually offered by one of the vendor. It's just to complete the experience of our customers or our partners' customers. This Flight Watcher basically allowed our partners, customers to be able to receive real-time alerts on the flight status, delays, the carousel, etc. And we are going to be having more of this kind of what we call ancillary services offered by partners to complete the journey or the experience of our customers to differentiate ourselves from other insurance company. And all these initiatives basically are self-paid for, I think, by the customers themselves via an opt-in options. On the Asia Pac side, there are also some encouraging developments. Enhancement of UI UX, I think that comes hand in hand, as you're aware that one of the biggest partners is AirAsia, and they have completed their upgrade of their moves or their platforms towards the end of September. So we actually see a more stable experience, I think, from the platforms, and also an improved UI UX, which effectively driven up our take-up rate that we actually received through that platform by 5 percentage points. I mean, 5 percentage point will probably converted to quite a significant improvement, I think, in terms of percentage. And also, we actually observe a policy so increased by about 12% Q on Q, which seems to be still quite encouraging. And given that the the completions of the upgrades to Zodiac platform was only completed at the end of September. On top of that, I think the team has also done quite a number of initiatives which include travel gadgets. I think as part of the initiative to see how can we drive the increase of take-up rate further on domestic flights. And travel gadget is actually one of those bite-sized products relative to the low airfare that people are paying. We actually are launching more bite-sized product actually to increase the take-up rate, and I think from the domestic travelers. Other than that, we are also happy to report that in the month of September as well, towards the end of September, we have successfully activated all the airlines travel agency, I think for AirAsia, what they call Sky Agents, for the Malaysian market. We hope this activation will allow us to have a increased, I think, take-up rate actually from the offline channel of the airline as well. Other than that, I think B2B partnerships in Malaysia, we have also gone ahead to acquire travel agencies by rolling out our B2B platforms for flights beyond AirAsia. All other flights, I think, could be purchased via our B2B platforms. Happy to report that as of now, or November, we have onboarded about 196 travel agencies. Hopefully, this is slowly going to be one of the key revenue streams for us moving forward. On top of that, we have also onboarded a credit card provider in Thailand and launched new partnerships for travel products to be distributed through them. Okay, that is basically just to give you a flavor on travel updates. I think next I will pass to my colleague, Jose, to bring you through Moto progress.
Hello, hi everyone. I'm Jose, the group head of underwriting. So for Moto, our focus will be much on managing claims and our portfolio mix within the preferred and profitable segments. Basically, our strategy is to improve our loss ratio to be as close as we can with industry standards. With that, we are expecting the loss ratios to improve in year 2025. Our Moto strategy will focus on three key areas, which I break it down into two parts. One is actually the business part. Our Moto portfolio will focus on key distribution channel such as Post Malaysia, and we will be also focusing on the preferred segment growth. Our target is also to increase our average premium level to be closer to industry level so that we can have a better claims experience. As part of the key three strategy, the number one is actually to portfolio mix improvement. What we are doing is actually to gradually increase our portfolio mix for better loss ratio. We are aiming for 4 segments. One will be the mid to high sum insured segments. This will be mainly focusing on private car comprehensive. 2 will be the motorcycle segments because I think based on our observations, this has a better loss ratio as compared to private car. Hence, growing these segments will help to improve our loss ratio. We are also focusing on the regions that has better performance, such as East Malaysia, and as well as to increase our Moto PA cross-selling rate to cushion down the loss ratio. To increase our average premium, we have actually implemented the Phase 2A repricing, which have gotten the approval in July 2024. Since we have implemented the new pricing, we are observing our premium has been gradually increasing, which is in line with our expectations that this will have a positive impact in our loss ratio, especially in year 2025. On the claims part, we have actually studied our portfolio and we have actually observed that our loss ratio, particularly on third-party property damage, is higher than industry. When we drill down further, we noticed that this is due to the change of claim practice since 2022, where our claims are registered more proactively, and hence, as a result, the number of reserve cases has been increasing. To address this issue, we are enhancing our claims management as our third key strategy. The claims procedure has been updated, means we are not only proactively registering the third-party property damage claim, but we have also enhanced the procedure so that we are improving the review process of the existing claims file. This change will actually improve the accuracy and efficiency in our claims handling. It means that on top of registering the claims proactively, with this claims procedure, we will also reviewing the claims and try to manage it more efficiently. That will actually improve in terms of loss ratio.
Okay, I think next we'll pass on to Chilling to walk you through on the other updates, including sustainability updates as well.
Hi everyone. Just some updates. One on cost optimization. You'll see that for year-to-date 9 months this year, we've actually managed to reduce our expenses down by 10% year-on-year. Among others, some of the cost optimization initiatives include streamlining our marketing initiatives, and we are on track. And management will continue to put a lot of effort in this regard. Yeah. A couple of awards won as well for the quarter. Tune Protect Thailand. This is not the first time they've won this award. I think either 2-3 years consecutively for Best Travel Insurance Company in Thailand by Global Banking and Finance magazine, as well as the National Corporate Governance and Sustainability Award. We are ranked 38, so we are among the top 50 public listed company, and again we are the highest ranked among all listed insurers in Malaysia on the NACSA award. We've also had a couple of launches. We teamed up with Rental Kill, and we actually launched a termite shield coverage that covers property damage, of course, caused by termites. So that includes to your home contents, like your furniture and your fittings and fixtures. Yeah. Mata Fair, we participated in the recent Mata Fair, of course, to promote travel insurance with our airline partners and travel agents, and we have managed to successfully onboard 7 new travel agents. On corporate good, which is our CSR initiatives, we've continued with our digital as well as sports focus for students. We've conducted a cybersecurity talk. Over 350 students came for the talk. We've also conducted some assessment with them, and all of them were above 90% in terms of their passing rate. We've also brought a group of sports enthusiast students to the to the University Malaysia Educational Sports Centre to pay a visit as well. So that's among the corporate good activities that we have done, and we have already achieved our 6,000 hours corporate good target set.
Hi everybody, I'm Janet, and I'm going to give you an update on the upcoming initiatives in Q4 2024. Okay, as Hao mentioned, we have in our effort to improve the customer experience and enhance our proposition to airlines, we are offering ancillary services together with insurance. So in Q4, we'll be launching the delayed lounge pass to the passengers, our airline passengers, and also in Q4 itself, we'll be launching our first ever a One Clean portal. This is web and mobile app for the key Asian markets. There will be 8 countries that will be launching this year in between November to December. So this is what we want to do is actually to harmonize the claim experience and offer a claim in the pocket friendly manner. So it's something that we want to do to ensure that our customers have a good customer experience when doing the claims. Okay. Next one is, these are all the others. If you look down on the left, we'll be partnering with, we haven't gone live, some of these, that's why I didn't mention the names. Okay. We will be going live in the coming week. So one of it is we'll be partnering with an event ticketing platform to offer insurance cover, which offers refund of the ticket price in the event the customer is not able to attend the concert. It can be anything. It can be concert, or events due to specific reason. Okay. The second one, we are also going to go live with one of the largest bus operator in JB to offer PA coverage to the express bus passengers through Johor Singapore Causeway and the Malaysia Singapore link. Okay. The third one is we are also partnering with another online ticketing and event management platform. This one, we have 3 products that we'll be rolling out to them. The first one is a refund of the ticket, similar to what I shared for the other partner. Refund of ticket due to specific reasons for concert goers. The second one is sports PA for coverage to marathon and fun run participants. And the third is the bus passenger PA coverage for express bus passengers. So this partner will be rolling out 3 products, 3 insurance coverage to their customers. In Q4, we will also be conducting A/B testing on selected routes with our existing airline partner in order to optimize our travel insurance offerings and also to increase our take-up rate, the take-up rate for this airline. Okay. There's also something happening. This is, if you can see, right, some of these are happening in Malaysia. They are in different regions. The other one is we'll be going live with a digital insurance and Takafu aggregation platform to offer travel insurance. So this digital partner is in Malaysia. Last but not least, this is in Thailand, where our Thai office will be launching a travel insurance with an online travel agent, an OTA, in Thailand. Okay, thank you.
That concludes our presentation today, and move on to Q&A. So if you have any question, can unmute yourself.